finally cut interest rates. The housing market has changed dramatically. Too many routines to buy or not to buy. Are the rich renting? That's right, the Fed finally announced a rate cut in September 2025. The majority of loan buyers almost wept with joy when they heard the news. However, don't be too happy. In the past year, the interest rate hike continuously pushed the mortgage interest rate to more than 7%. This time, it was only symbolically reduced by 0.25%. In the past 30 years, the mortgage interest rate has dropped from about 7% to about 6.3%, the lowest in nearly a year. 6.3%. It sounds lower than 7, but looking back 2 or 3 years ago, the interest rate was only 3% or 4%. The current interest rate level still puts great pressure on buyers. Before the video starts, please subscribe to us little blue people, retweet and like. If you have your own story of living overseas, please contribute to us and share your life with more Chinese friends. Calculate the account based on current rates and home prices. The US median house price stands at $420,000, while an average family earns $100,000 annually. Even with a 20% down payment and a 6.3% interest rate, the $2,080 monthly mortgage takes nearly a quarter of household income. Even with one rate cut, housing affordability remains poor. A real estate economist straightforwardly commented, "This small interest rate cut alone is not enough. Unless the mortgage interest rate drops further sharply, or the growth rate of house prices slows down or even falls, the burden of buying houses will really improve. After all, house prices and interest rates are high. Many buyers are forced to wait and see, and sellers are afraid to list for trading easily, and they are all frozen. Fortunately, once the interest rate cut begins, the mortgage interest rate is expected to decline slowly in the future. Of course, don't expect to return to the historical low of 3%. It would be good to drop to 5% or 6%. Buying or renting a house? Who's the better deal? Back to the controversy at the beginning, is it better to buy a house or rent a house? Is it true that the article said that all the rich people will rent houses in the future? I don't think it can be across the board. It depends on the specific city and individual situation. Let's start with the radical point of view of that article. The author thinks that young upstarts may prefer to invest their money in stocks, businesses, and other fields rather than lock them in their houses, so they would rather rent a house than take a mortgage. This sounds reasonable, but it may not be suitable for most ordinary people. For most families, housing is still one of the main assets. The advantages of renting a house are obvious, flexible, and trouble-free. You don't have to empty out your savings to pay a down payment at once, and you don't have to worry about miscellaneous expenses such as maintenance, local taxes, and housing insurance. Cash flow pressure is low, so move away if you want, especially in some parts of the United States. Property taxes, insurance, and leasehold property fees are rising year by year, and the maintenance cost of houses is high. Renting a house saves these troubles. In addition, in recent years, the rate of rent increase in many cities is not as exaggerated as that of house prices. Up to now, the median rent in the United States is approximately US $1,700, slightly lower than the peak in 2022, and the rent level has generally stabilized. In contrast, house prices have risen much higher than rents in the past few years, so it may be more economical to rent in some places with big house bubbles. However, the disadvantages of renting a house are also fatal. When the rent goes up, you have no control over the long-term housing expenses, and paying the rent every month is equivalent to repaying the loan for the landlord, and you have zero accumulation. It is often said that renting a house means working for the landlord, and it does. The advantage of buying a house is that part of the monthly payment helps you accumulate real estate equity. Until the mortgage is paid off, you will at least have your own house, which you can live in and pass on. This is a sense of stability. Of course, the risks of buying a house can also be seen. First, it takes up a large amount of money and reduces liquidity. Second, there is a risk of fluctuation in house prices. If you buy at a high point, your net assets will shrink if you fall in the short term. However, as long as the loan is not excessive, the house will look good in the long run. Owning property remains a proven way to build wealth. Therefore, whether to buy or rent, you have to settle your own account. Simply put, if the house price in the city is inflated and the rent is cheap, renting a house may be more cost-effective. On the contrary, if the house price is reasonable and the rent is expensive, it will be better to buy a house early to lock in the cost. Everyone's situation is different, so don't let others' one-sided opinions influence your decision. Shanxi merchants warn against buying houses, hinting at hidden agendas. Let's revisit the real estate company owner advising against buying homes. Is it out of concern for others or a new profit-making strategy? For example, BTR, which is popular in the United States now, is a housing building model that only rents but does not sell. Developers build a house and don't sell it, don't stay as landlords for rent, and collect rent every month. To put it bluntly, the boss advocated that the rich should rent houses, probably because he wanted to be a big landlord and collect the rent of the rich. Professional analysis bubble does not exist, and a sharp drop is unlikely. Finally, let's see what professional institutions and people say. Most experts agree the US housing market isn't collapsing given stricter lending standards. With tight supply, the market consolidates at high levels. US house prices have stagnated post-2022's surge and may rise slightly, around 2%, or stay steady through 2025. Some hot cities with increased inventory may experience price corrections, but house prices in most areas are still steady and slightly rising. Therefore, I'm afraid it's unrealistic to wait for house prices to rise before buying. Instead of waiting for a crash, pay attention to changes in interest rates. Industry insiders predict that mortgage interest rates will not fall below 6% soon. Cutting interest rates will bring some buying momentum, but it won't make house prices skyrocket or plummet. For ordinary buyers, the key is to evaluate their own conditions and choose the right time to act. In terms of buying a house strategy, experts suggest that if the house price in your area has been adjusted back and your economic conditions permit, you can consider entering the market when the market is deserted. Especially now, many new house builders have begun to reduce prices and promote promotions, giving various discounts. On the contrary, if the house price there is still high and the pressure to buy a house is great, then it's okay to rent it temporarily, recharge your batteries, and wait for a better opportunity. Conclusion: there is no unified correct answer to buying a house or renting a house. With high prices and rates, renting might not just support landlords but could be practical. If confident in a location's prospects and financially capable, buying brings peace of mind and asset growth. Real estate remains a key avenue for wealth building. Above all, avoid being swayed by exaggerated claims. Analyze your situation calmly and choose wisely. I think it's too exaggerated to say that the rich will rent more houses in the future. A truly rich man should buy a luxury house, and he won't miss it when he is a landlord to collect rent. It's impossible to collectively run to be a tenant. Okay, that's all for today. I hope my analysis will be helpful to you. Thank you for watching. Don't forget to like and support. See you next time.